Hey, good morning, everybody. Dan Rawitz here. This is video 2 of the options trading account. Options trading video. If you didn't listen to one, please go back and find that one. It's called Intro to Options Trading. Today, I just want to give you a little more feel for what I'm doing, more than probably teaching. But I think just watching me will provide a good teaching lesson. So yesterday, I explained that the main way that I make money in options is I sell contracts, mostly puts. So basically, when I sell a put, I'm assuming the stock is going to not go down very much, but I always leave myself room for it to fall a decent amount, or it's going to go up. And when those two things happen between the time I sold the put and the contract expiration date, you can see the various contract expiration dates. When that happens, I get to keep the money that I earned when I sold that contract. If the stock runs away and falls too much, then I have to buy back that option, and that's when I could take a loss. But so what you can see here right now, these are currently open positions. And I mentioned yesterday, I don't like to let these run until the end of the contract. Like Oracle, it is a great position, very safe. The stock could fall all the way to $34. All the way to 34. It's currently at $49. So it's not likely we lose money there. But on the other hand, we have some capital tied up until December, and I've made 60% on my money. And again, we're taking small positions here, lots of small positions, as opposed to trying to make a home run on any trade. Because when you try to go for a home run, you also strike out. I consider myself the Ted Williams of trading. I just want base hits. So I mentioned yesterday I closed these out. So real quickly, I'm going to actually close these accounts, these trades. So we'll start with Vail. Vail, I took, I don't know, all of these, by the way, were taken in July. Let's see, where did we buy it? We bought it at about 33 cents a share. It's currently selling for 11 cents a share, so there's a 22-cent gain. Here's where it says what it's selling for. And so, I think to trade those. I want to do that for you so you can watch. So I'm going to sell Oracle, I'm going to sell Vail, and I may sell Caesars because I think that's also up 60%. So I'll take about $500 in gains, and that probably puts us up about $3,500 for July. And keep in mind, these are small positions we're taking. Okay, so first we'll sell Vail. Okay, so all I have to do is click on close position, and you can see this is trading between 10 and 12 cents. So I could do a limit order and tell the Wall Street I only want to sell at 10 or 11, but we're going to do a market order, and this shows I'm going to buy to close, because remember I sold these. Now I'm going to buy them back. I sold them for 37 cents. I'm going to buy them back now for 12 cents, and I'm going to make a quick 25 cents a share. So we're going to make this a market order, good for today. It says estimated cost $96. Yeah, because I'm buying them back. Keep in mind, I already got paid $300 and some odd when I sold the contract. Now I'm going to buy it back for far less and make a good profit. So we'll just go to Oracle, because again, this doesn't expire till December. I don't want to hold it till December. And Oracle, we bought at about 29 cents, currently trading at 11. We have a 62% profit. So all I got to do is click that, click on close position, and now we can sell this Oracle. You can see it's just like the other one, trading between 10 and 12 cents. We own 10 contracts, and so just a quick summary. It's trading for 11. We bought it for 29, so we're going to make an 18-cent profit. We're going to take $180 off the table right now. Okay, that's filled. We're out. And one more just for fun. Caesars is set to run until September. But again, we're 60% up on this trade. We paid 19 cents for it. It's trading for 7.5 cents. So we'll click on this right now, and we will review that order, and we'll place it. And we got filled at 8 cents. So that's a good fill. So we just took about $500 or more off the table. The positions that I have open right now are fairly new. Gap's a pretty new position. Keep in mind, some of these might show red, that we're down a little bit, but they're newer positions, and we got lots of time, and they're small risks with short stop loss. Decker, we talked about a lot yesterday. This is a trade I took live for you, and if you remember, we looked at the chart very carefully, and I showed you where I picked the support and resistance levels. The stock's actually not traded too well, but we're in this option really securely. We sold an option to somebody that we would buy shares at 97.50 if they got down below that level, and the stock was trading at about 117. So this position's up 10% just since yesterday, which is nice. Now, before I close, I really wanted to show you guys. By the way, I've been overwhelmed by the amount of people emailing me saying they want to get involved in this, and that's really cool. I'm probably going to start with about 30 people because I want to make sure that everyone can follow along before we scale too much. So what I wanted to show you, because it's pretty cool, is Netflix. So Netflix was a position that I actually held a fair amount of trades in, and it could have been disastrous. So Netflix reported their earnings on 7/16. I deliberately took this trade on 7/15 because Netflix has done a phenomenal job beating forecasts, and you can see they reported earnings, stock went up. Reported earnings, stock went up. However, this quarter they missed their earnings, and literally the bottom fell out. It went from $420 down to $350 in a matter of, I think, 2 days. But here's the deal. Remember, I told you I'm really careful about where I put my options in place. And so if you were to draw a line here about where the support is, and a lot of you guys that have followed me on RateWatch, you know how to do this. So here's a support line. You can see that there's tremendous support right about here, 354. Okay, you see that? Support, support, support. We dipped down below a little bit. I didn't panic because I had sold my option down to 340. So let's look what happened in a situation where Netflix was the talk of the media. If you were listening to any financial news, you were hearing about Netflix cratering. I think it was down 30%. Look what happened to my account. Let me go here. Got a couple things to show you. Oh no, they're gone. All right, let's see if we can find them easy enough. Okay, good. So here's Netflix. Like I said, I had a number of positions on, and so I closed all these out, and you can see some of these were single contracts, but I got filled one contract at a time. But you can see 88, 60, 60, 31, 31, 29, plus 13. Now this one looks scary. Oh my God, you lost 1,700. But this was a dual position where I went long and I went short at the same time. This is a really kind of a protective call, and it was part of all of these. So this was all really one trade, and if you add all this up, we made about $300 while Netflix cratered. And then we did even better on our other position. Okay, so here's gains and losses, and what you can see here is where's Netflix? Okay, so this was my other Netflix trade. We had a gain of 49, 41, 195. So that was another, what, $250, $300 on a stock that cratered. And we took this profit just a couple days after earnings. And by the way, while we're at it, you can also see for July in just this small E-Trade account, I think I have 15,000 in it. And we haven't come close to trading what we could have in this account. We've taken about $1,300 of profit from this account. So, and you can see, actually, all red, all wins. Again, this was part of a dual contract, so it looks like we lost 600, but we also made 1,000 on the same trade. So we made about 300, 350 on that trade. And then this was the same thing. This was part of a dual trade. We went long and short at the same time. We made 200. And then this was just a contract we sold and we made $50. So I think that's good for now. I just wanted to give you guys a better idea of what happens when you do these trades, and what it's like to actually sell something you don't own and then buy it back for a lower price. All right, let me know if you have questions. Again, we're going to turn this into a kind of a service where you guys can pay monthly with a kind of a guarantee that if you don't make money, you won't pay for the service. Okay, that's it for now. Thanks a lot, everybody.